RMV is relative measured volatility. It's an indicator that we've developed to help you identify these tight areas. Learning to trade from tight areas, VCPs, can benefit you regardless of your time frame. Every top trader, especially momentum trend followers, they're often looking for this VCP type setup. So you're in good hands if you're looking to adopt this into your style. If you didn't have RMV, you just kind of have to look through a lot of charts manually, stocks and uptrends, and try to find, tight areas on the right hand side. And it can be, you can look through hundreds of charts and not find one. We've got multiple presets in Deepvue that build in RMV right into the screen and look for stocks that are forming these tight areas right here in the moment. So we make it really easy with a few clicks. RMV, as it gets closer to zero, that basically means we're forming a tight range. As it expands, it means we're expanding relative to the recent price actions. Alco is a really good example of a tight area happening right below that base pivot that then leads to that breakout. Welcome everybody to another Deepvue webinar. This is going to be a really great one. This is one that I'm personally very excited about, and we'll be discussing finding and trading VCP setups with Deepvue and RMV. Discussing, first of all, why are tight areas and VCP patterns so effective and important to recognize, and then how you can find them easily and just trade them a little bit more effectively using an indicator that we developed over in Deepvue that I personally worked on and brought to life. And it's very cool to see other people using it, and we'll be walking through a lot of examples, a lot of chart examples today to kind of bring everything to life and hopefully help you guys out in identifying those VCPs. So here's the key goal of the webinar, pretty much what I just said. Hopefully by the end of this webinar, you guys have improved a little bit on your identification of strong entry points from tight areas and kind of build that sense of knowing when a stock is ready to go. I had a discussion with a few people on Twitter the other day. We were talking about daily focus lists. I personally find that the less stocks I'm focused on a daily basis, so how many stocks I'm actually looking to enter that day, the better I execute, and also the calmer I feel in the moment. And a few people mentioned, they can't watch only 3 stocks because often, they don't feel like they can pick the right ones. A lot of stocks move without them. So hopefully today in this webinar will help you build that feel and kind of better identify the stocks that are really ready to go and their patterns are really mature and ready to develop and ideally break out. So that's the goal in today's webinar. So here's a little bit of the agenda. First, we'll talk about what is a VCP, volatility contraction pattern. We'll discuss tight areas, and historical traders and how they look for them. Then we'll discuss how to visualize tight areas using the RMV indicator, which is really handy and really helps you kind of analyze a chart just like some of the top traders in the world, USIC champs, and in finding those tight areas really easily. We'll dive deeper into the RMV indicator and then talk about screening for VCPs in Deepvue, 3 steps to trade execution, and then run through a lot of charts live in Deepvue, and then hopefully answer a lot of you guys' questions as we go out through this webinar. So really, really excited for this one. Thank you guys so much for tuning in. And hopefully you find this valuable. And let's go ahead and dive right in. So first things first, actually, let me go back. We have a special offer currently, a really great deal, 2 months for $39. If you haven't yet tried Deepvue, highly recommend checking it out. It's my daily driver for everything. And we've heard from so many different traders who have switched from other platforms that's basically helped speed up their routines and, the breadth of data points, the fundamentals, the growth numbers paired with the technical screening really helps you narrow your focus that much faster and hopefully trade more effectively. So definitely check this out. Visit deepvue.com to access this offer. All right, so let's start from the very basics, kind of the foundation of today's webinar. What is a volatility contraction pattern? Essentially, it's kind of an element of market structure where stocks move from expansion, then they compress, and then they expand again. And this expansion can be upwards or downwards, but this is just kind of how stocks tend to move as a function of supply and demand. So getting into the bullets here a little bit, a VCP is basically construct a base pattern within the context of a longer term uptrend. And this is really key here. It's a continuation setup, meaning that we've got an existing trend going. We compress, form a base consolidation, and then we're looking for an entry point that completes the overall pattern and leads to that next leg up, that next expansion. And this VCP is characterized by tightening in price action from left to right within the base. And oftentimes, if you've got volume plotted, you'll see that same type of contraction, go on during this base. Volume is higher at this turning point here, then slowly throughout the base, it declines, even though at some points, as such as move ups here, we might see the volume increase for a few days as this leg moves up, but then, it declines again. And ideally, as you go through and complete this pattern, the legs down see less and less volume, and these contractions actually get tighter and tighter as the spring kind of gets coiled, and then we're ready to explode and start that next expansion leg up once we complete that VCP pattern. And this is kind of, it's a function of supply and demand, because as this base is forming, we're seeing people who are taking profits after maybe they bought down here, they're selling into this base, and we're seeing kind of longer term holders either accumulate more shares, or new participants are coming in, absorbing that supply. And as the stock matures within this VCP base, less and less supply is coming to market. There's more demand coming in. And then finally, when demand overcomes supply, that's when we see this next continuation, that next breakout and move upward. And VCP, I'm sure many of you guys know that it's a term coined by Mark Minervini. And this kind of element of market structure and this VCP pattern, it's been called a lot of things. Mark, coined it very well with the VCP, but many different traders going back in history looked for very similar patterns, going back to William O'Neill with the cup and handle, which is an example of a VCP. You've got the Wyckoff Springs, Jesse Livermore looking for pivotal points. So there's kind of a whole record of historical top traders trading very similar patterns to this. One more to mention, Darvis with his Darvis boxes. This is basically a Darvis box with the ceiling being this base pivot and the floor being, the bottom of this base. And then he looked to buy as we broke out and started that new expansion upwards before the stock would form its next base. So the VCP, a historically significant pattern. And it's an element, as I mentioned, of supply and demand. And it's not going to go away, because it's a function of human psychology, greed, fear, all of that kind of, coming together and forming this price pattern that then we can take advantage of as retail traders. So as I mentioned, all legendary traders looked for a similar pattern, from cup and handles to Darvis boxes, Wyckoff Springs, pivotal points. All of them are kind of rooted in the same type of pattern. And that's what we're really talking about today. So let's see if there's any key questions. And Rai, feel free to shout out if there's a question that you'd like me to answer live as we go. But let's see. How's the VCP similar or different to a squeeze in a longer term uptrend? That's another way of putting it, David. We're basically squeezing. And if you had Bollinger Bands plotted here, you'd see them kind of contract throughout this base. So it's just another way of saying VCP. So here we go. All right. So cause or effect. As I mentioned, a lot of people, when they first learn trading and first pick things up, they're trying to kind of memorize the patterns. They're trying to memorize exactly what a pattern looks like, down to a candlestick pattern. And then they kind of trade that in isolation, not really thinking about the bigger picture, what that pattern signifies and what's actually creating that pattern. So a lot of people wonder, is this VCP, is it self-fulfilling prophecy? Is it because everybody's looking for it that it works? And, people are watching the breakout, it breaks out, it fails. That's because too many eyes were on it. That's not really true. Definitely, there's been more reversals in recent years, but this pattern is really formed by the bigger picture players, the institutions, the people who manage large funds and pension funds, where they're accumulating hundreds and thousands of shares, and they're absorbing the supply that comes in throughout this base. And this kind of puts in a floor into the stock. And as they accumulate, as I mentioned, they kind of bring up and contain and absorb all the supply that's coming to market, and that leads to the contraction that we see. And then finally, once they're done accumulating, or enough individuals and institutions start accumulating, then we get that breakout, and we see that continued push upward. But it's not really a pattern to memorize. It's a framework to think of as you're looking at charts and looking for buy points, looking for overall setups. So don't get too focused on, a VCP has to have 3 contractions. It has to contract, this much on this contraction, this much on this contraction. Look at the bigger picture, see if there's accumulation signs within the base, both in terms of price and volume action, and then look for a very tight area on the right-hand side that then you can look at to use as an entry point as the stock pushes above that pivot. And we'll talk a lot about that later on in this webinar. So as I mentioned, let's see here. Basing and contractions are caused by sellers getting absorbed. Buying pressure supports the stock on any pullback on these legs down, and then selling pressure gets weaker throughout the base, and that's what often leads to the higher lows as the stock approaches these all-time highs, and then the eventual formation of the VCP pattern, and then the breakout through that pivot. A good question from Lisa. What's the typical time frame? Just want to answer this really quickly. I typically look for VCP patterns on a daily chart. The length of this base, can be as short as a few weeks to as long as many months. But typically the ones that I'm looking for are in a longer term uptrend, and typically are about 7 to 3 weeks long. I would say the best ones are a little bit longer, on the longer side, and have a stronger uptrend preceding them. That's kind of the key that I think a lot of people forget, especially when looking at the O'Neill patterns. A lot of people, are looking to buy cup and handles off the bottom or in a longer term downtrend. We're always kind of looking for an existing longer term uptrend in a stage 2 stock, and then looking for continuation buy points that resumes that longer term uptrend. And this pause, as I mentioned, I look for a few weeks, and it can kind of be up to you. But for me, the sweet spot, 3 weeks, 2 weeks at the very earliest for a really powerful momentum move type name, and then a longer base can be several months long. Good question. All right, I see a lot of people providing extra commentary in the chat, so excellent. Keep that coming. Very cool. No, Lisa's just a participant, I believe. So here we go. So the William O'Neill cup and handle. So I want to discuss a little bit more about how this relates to the VCP, because really a cup and handle is just an example, a subset of the VCP. And here I've got some screenshots from documents that William O'Neill created. And you can see, that overall pattern, the contractions, the tightening from left to right within this base, the very tight area on the right-hand side, and then the breakout through that pivot on a pickup in volume. That's exactly what we're looking for when it comes to the pivot point breakout of the VCP. We've got more highlighting, tight closes, 3 weeks tight. That's another example of a VCP. So O'Neill looked for the exact same thing that we'll be talking about today, which is, tight weekly closes, volume dry ups within the handle as the stock pulls back and forms tight ranges, and then larger volume on up weeks, lower volume on down weeks, and then finally that volume explosion on breakouts through the key pivots. And often as we see here, there are kind of patterns within patterns, and this is kind of a higher level concept. But here, for instance, we've got this base here with a base pivot up here, but up the right side, this handle right here is its own little base. You've got a prior uptrend, then this base that contracts from left to right, gets really tight right here, and this base pivot is right here. So this range, and I'm going to call it range because I'm going to use that word quite a bit in today's webinar. This range is within this longer term range, but we're seeing a pattern of ranges getting tighter and tighter from left to right, and this pattern is even within this smaller base. So you're always looking kind of from these contractions within contractions, and that's where you can really find ideal entry points where you can manage risk really effectively, buy through that pivot, set your stop at these lows, and keep your risk really tight, put on a decent sized position, and ideally, ride that next leg higher. So the William O'Neill cup and handle, great example of VCP, and there it is right from the master. This is what he was looking for. Another example of a top trader, market wizard who uses the same concepts is Stan Weinstein with the stage 2 continuation pattern. This is basically a VCP. This should look really familiar. We've got a leg up, contraction within the base getting tighter, forming higher lows. Then we've got the pivot breakout at point A right here. And you can see volume pickup on the breakout, volume decline within this base from left to right. And then we're looking to ride this trend up here above the moving average. So, every top trader, especially momentum trend followers, they're often looking for this continuation type setup, this VCP type setup. So you're in good hands if you're looking to adopt this into your style. All right. So let's talk a little bit about tight areas and why they are so important. So there's a few reasons that we'll get to. But first of all, kind of what is a tight range? Tight range for me can be as little as a few days, even 2 days. And that could extend to, a few weeks, especially if you're looking on a weekly chart. And a tight range is basically on a relative basis, a tighter spread from high to low within the context of the longer term move and longer term character of the stock chart. And what this indicates, especially if there's a lower volume during this range, is a lack of sellers and kind of an equilibrium in terms of price between supply and demand. As I mentioned, the larger institutions, they've been accumulating the stock. They're supporting the stock at that price level. There's no really big sellers coming to market. They've all been worn out throughout that VCP pattern. So this tight area represents, that final bit of equilibrium, that final pause before a really explosive move. And that's what we're looking to take advantage of as traders. And as I mentioned, these tight areas are a key sign of accumulation as buying pressure pins the stock to a level. And it can also be used, as we'll mention in this video, as an entry tactic / setup. And this is because it forms a clear pivot point, a clear spot to actually enter the stock as it resolves that range. You're able to manage risk tightly, either at the low of the range or the low of a higher low within that range. And if it reverses back into that range, very quickly if you're wrong. And that allows you to keep your risk really small. And even if you get stopped out enough times, a couple of times, maybe the stock tries to break out of the range, pulls back in, breaks out again. Even if you're stopped out a couple times, if you're able to catch that one breakout, that one expansion move that completes a larger pattern, that's when you can get some really nice gains that pays well more than all the small paper cuts that you experience while you're trying to trade that range. So those are kind of the key components of why these tight areas are so important. They represent accumulation, and they can be a really good entry point into a stock. And this graphic right here is something very similar to what we've seen before: a prior expansion trend before, then consolidation, VCP, formation of higher lows. We see a significant level here, which forms that pivot point. This is the range within this longer term base. We expand upward, breakout of this smaller pattern here, this tight range that resolves the larger pattern, the VCP. We expand upwards, form another tight range. This could be an add, or for a swing trade, an initial entry, and we resolve again to the upside. So both this here and this here represent ranges that could be 1 to 2 weeks, or just a few days where the stock really tightens up relative to the character that it's shown within the base and during the trend. And these are opportunities as it resolves through that pivot point that we can, take advantage of as traders. Let's see here. Jeff asked a really good question. Do the principles in this webinar work on all time frames? Yes, they do. If you look at a weekly chart, if you look at a monthly chart, intraday, VCP patterns form all the time. And that's because, as I mentioned, it's an element of market structure. It's a function of supply and demand, creates and resolves price action on all different time frames. I'm going to show charts in this webinar on daily charts primarily, but also on weekly charts. And I've got some intraday charts as well of GME just today formed a VCP on an intraday basis. And I actually took that trade and traded it from a VCP on an intraday chart. So it works on all time frames, all different styles. And this explosive move, regardless of your style, whether you're a day trader, swing trader, or position trader, you can use that to enter your position and then manage the trade that's relevant for your time frame, whether you want to sell into strength on that first day if you're a day trader, hold it for a few days to a few weeks if you're a swing trader, or try to play the longer move if you're a position trader. It all kind of comes down to your own personal style, but learning to trade pivot points, learning to trade from tight areas, VCPs, can benefit you regardless of your time frame. a really, really good question. Let's see. Sometimes the breakout happens on extended runs coming out of bases rather than tight areas. Is it better to focus on tight areas only? So Edgar, really good question. Sometimes we get a run up off the bottom of the base. We approach this base pivot and there hasn't really been any consolidation. There's nowhere to manage risk. And what I would say is if you can't manage risk, it's not worth taking the trade. If we've got a run up off the bottom of the base with no consolidation, the stock, and this happens a lot, will often reverse hard, then form a range and then re-break out, or we form a range above the base. And that's a spot where we can manage risk, or we can wait for the reversal down and formation of a range back in the base and then buy that re-breakout. But if a stock runs up all the way here, it's likely to be more volatile, move up and down quite a bit, stopping you out if you try and manage risk tightly. So you want to manage your risk and only, look to trade patterns where you can manage risk really, really tightly, because that's the name of the game. It's okay to miss a stock that goes up without you, but if you enter a stock, without a spot to manage risk, you're just kind of setting yourself up for failure over the long term, over a series of trades. It might work for one, but over the long term, it won't be quite as effective. But really like that question. Let's see here. All right, I'll keep going here. There's some good questions here, but I want to keep pushing on here. So this is an example from back in 2020, TTD. This is another stock that I traded. We've got a nice kind of cup and handle here. You could also call this a pseudo double bottom, but really we get this nice rounded base. Then we get this handle form. We get a shakeout within the handle, which is another clue, a sign of accumulation. And then within this range, we get the breakout that resolves this shorter term pattern, but also this longer term base. And that led to a move of 200% in just a matter of months and weeks. And that's the type of explosiveness we're looking for. And you can see it never revisits, this prior pivot. And that's a sign of real strength. And that's another benefit of the VCP, is that because the supply and demand, equilibrium is in your favor on this VCP as it resolves itself, we get this explosive move and we get a strong trend right out of the gate, right from your entry point. So you don't kind of experience any pullback, drawdown in your account, and you're just kind of at a profit immediately. You can move your stop up pretty aggressively. And that way, you're just looking to put yourself in a winning position right from the start, where you can manage the position from a position of strength, a position of confidence, because again, a lot of this is mental, and having a stock push right from your entry point without experiencing any pullback, any loss, it just sets yourself up for a lot more success. So this is a good example here. And we've got the same stock on a weekly chart. I mentioned you can use these concepts on a weekly chart as well. We've got this cup. This is the handle here. You can see how tight these weekly closes are. This is another element of VCP, tight closes here. We get that shakeout. You can see it really clearly on the weekly chart. And then the stock's right there, ready to go, resolves itself and just doesn't really look back, forms another base, breaks out again. But this entry point really put you in a strong position where you can manage risk really nicely versus the low of that week on that breakout day, and just kind of ride the stock to higher prices. So on a weekly chart, this is a great way to think of VCPs as well. And you can see this is about, a 10-week pattern, maybe 12 weeks here. So for Lisa, who asked how long these bases are, this is a pretty normal one. We've got, the correction, which leads to the bases, forms the bases, and then the pattern resolves itself up the right-hand side here. And you can see down here, RMV, which we'll be talking about later, on this weekly chart went right to zero right before the breakout. So we'll get into this indicator just very, very shortly, and how it can be helpful for identifying these tight areas. Here we've got another one. We've got Shopify. We've got this longer term base. I believe this is a daily chart. Yep, that's right. And we see these tight areas form where, we've got the base here, one contraction, two contraction, one really tight contraction. You can see how tight this range is relative to the rest of the base, where we're moving up and down. And then we really tighten up on the right-hand side. Volume is below average, below the moving average here. And then we break out and even form kind of more tight areas, more potential spots and entry points along the way. But we continue to, move up on higher volume, go tight, move up on higher volume, go tight, move up on higher volume, go tight, and, so on and so forth. So You often see that up the right hand side, especially in stocks that are under significant accumulation. There'll be very little give back, and it will continue to form these tight areas after the stock has even broken out. And those can be ad spots, or if you missed it and it's not too far from the base pivot, it can still be a really good spot to add shares or start an initial position even. So that is Shopify. This moved 200% over the next year. Not quite sure if I remember exactly what year this resolved itself. All right. I see a question about how to enter as these are breaking out. We'll get to those key steps later on. That's kind of one of the last slides of this presentation. And like Kimberly said, all the above, you can use your own specific entry tactics to enter these larger term patterns. All right, here's Shopify again. I believe this is from 2017. Again, we've got a base forming here, and this is actually part of a longer term uptrend from its IPO move, and we form a base here. And again, we see tightening from left to right, a nice move up the right hand side, then 4 days, which get really, really tight, pullback, very low volume, and then we explode upward and break out of this multi-month base on very high volume. So again, an example of a VCP with that last contraction being the short-term flag here, and that's what we can look to identify. And again, RMV going to 0 right during this flag, helping you identify that tight area really effectively. Here we've got the famous Google IPO base. It shows the same kind of VCP characteristics where we've got a consolidation, a really tight area that forms relative to prior price action, and then a breakout off the bottom. This often happens in these IPO bases. And this is a much lower risk area to enter on this day here than if you wait until we're at this high. As somebody asked earlier, what happens if the stock just moves up without forming a tight area? If you don't enter here where it's tight and you can manage risk, at the bottom of this day, the day before, or the bottom of this range here, if you wait until you're up here, the stock's been up 5 days straight. So there's not really any spot to manage risk, to put your stop loss at, because it could easily pull back, stop you out, then continue to go. So you have to look for a spot to manage risk, which was the ideal buy point was down here off the bottom as it forms this tight range, or even, here it forms a short flag here, pushes up here as it resumes to the upside on increased volume. So you can always find spots to manage risk. And those are tight areas throughout the move, whether it's the very beginning or kind of continuation tight areas as the stock progresses higher. All right, here we've got one of my favorite charts to study. We've got Tesla in 2019. This was the monster gap that it had where I think it was first turning profitable and kind of turned the corner in terms of its guidance. We saw a huge volume on this gap, huge continuation volume on this gap the next day as it progressed further. And then, if you didn't get involved here, it's not too late, as we well know, because we know what happened afterwards. We wait for a stock to form a tight range, which it does right here. You can see RMV come down to right near 0. We form a pivot here. This is the range. This is the tight area. It pushes higher. And then even here, if you missed it, it wasn't that big a deal. You might have even got stopped on this gap down, but it always is going to form another tight range if it's going to progress higher. And it does right here. It gets super tight, then pushes higher on a pickup in volume. You can see how low the volume was during this tight range. And then we see that definitive pickup in volume as we progress higher. And this was right at the end of 2019 in the fall. I remember it really clearly because I missed it. We just progressed higher, and I think it was up over 100% in just a matter of days and went into a climax run before kind of the April pullback due to the COVID correction. But really nice tight area here. So once you identify kind of that changing character, that longer term uptrend, the signs of accumulation where you've got a big gap up on volume, strong push higher, then you got to wait for that tight range to form and look to use your entry tactics and resolve and enter the stock as they push through those pivots. And we've got a tight area here. We've got one here as well that would have been really great entries into a promising stock that was already showing signs of accumulation. We're not trying to buy a stock that nobody's heard of, that's not showing any positive signs, that's just in a downtrend because we think it can't go lower. We're looking to buy strength. We're looking to buy continuation patterns after the stock has already shown its hand and shown that it's being accumulated. And there we go. It was 190% in just under 70 days. A really powerful move and a great one to study if you want to go back to 2019, 2020. All right, so I want to kind of give you a little bit of work here today to make sure that you're not just listening to me and you're actually applying these concepts. So I want you to kind of train your eyes to look for the tight areas in VCP action that we've been talking about today. So as I mentioned, tight ranges, tight closes, low volume up the right hand side of the base. That's what we're looking for. This price tightness, these tight areas can be as little as 2 to 3 days. And as we'll get into, we're looking for, on RMV, about a value of 12 or less, maybe 15 or less. The tighter, the better. The closer to 0, the better. But we'll get into how that can help you spot these tight areas in just a few slides. But in this chart of PLTR, I want you to think to yourself, where are the tight areas on the chart? So just take a moment here. I believe I have the answers on the next slide. So hopefully you guys didn't see that too much. So take a moment and look at this chart, and maybe I can even blow it up a little bit here. And think to yourself, where would you identify the tight areas here? And I have kind of 2 marked with pivots, but think to yourself, we'll just take 20 seconds here. Think to yourself and identify where are the tight areas during the run. And we'll cover the examples, the answers in just a minute here. All right. I should have had some music here, some TikToks. Maybe, Rye, you could hum some music for us. I see a question. What is RMV? RMV is relative measured volatility. It's an indicator that we've developed to help you identify these tight areas. So a clue might be in finding these tight areas is looking for RMV to get really low within its range, close to 0. But we'll show the answers in just a second here. I see a few people dropping dates there. That's good. So I just want to make sure to give you guys the chance to identify for yourself. All right. So let's go ahead and show the answers. Let me zoom out. Okay. So here are the tight areas that I identified up the right-hand side. We've got this first IPO base here. It actually is pretty tight during these downtrends. So if you pick these, I won't be mad here. Even these 2 days are pretty tight, but it really forms a nice range here below this pivot right here. Again, we're always looking for ranges within ranges, and we get a nice breakout. But then, as I mentioned, the stocks under accumulation will continue to form these tight areas. We get one here for a few days, it pushes up. We get this one for a few days, pushes up. That's the end of really the climactic IPO move. But even within this base, we see tight areas here for these 2 days, tight areas within this range. These 3 days are tight. These 4 days are tight. So again, they can be very short term, but we're looking for these characteristics that are signs of accumulation, but also, again, potential entry points up the right-hand side of a base. So here, we're kind of moving up the right-hand side. We've got this tight area. This could be viable. We go tight again. We try to push out. This fails. You might get stopped out here. But then on this last tight area, we get that breakout on huge volume. And this could have been a really nice swing trade up the right-hand side. So these are the kind of the tight areas I picked out. Again, there could be a little bit more, but let me know in the comments how many of these you saw. And if you didn't, maybe you're newer to this and this is great practice for you. If you got all of them, fantastic. You can tune out of the webinar right now. Just kidding. Don't do that. But hopefully you guys got a decent amount of these, but if you didn't, that's what we're shooting for today, to help you identify more and more. And the RMV indicator, as we'll get to, can help you spot them really, really easily. So let's go ahead and push on here. All right. So this answers the question that people were asking in just a minute. What is RMV? RMV stands for Relative Measured Volatility. If you think about what that means what is the volatility of the recent range relative to recent price action, normal price action of the stock. So RMV, what it does is it compares the current volatility to the average over a certain look back period. And typically by default, we use a 15-day look back period, but you can set this to whatever you want in Deepvue. So you're basically comparing the current volatility to the average volatility of that look back period and seeing whether that current volatility is a lot higher than normal as we're seeing price expansion, or it's a lot tighter than normal where we're forming a tight area, a tight range, as we've been talking about. So RMV ranges from a score, a value of 0 to 100. The closer to 100 it is, that basically means that we're expanding in terms of volatility. We're seeing expansion, and the closer to 0, the tighter we're getting in terms of the price action. And as I mentioned, we typically use a default of 15 days. That's what I found is most useful on the daily chart for growth stocks. But in special cases, as we'll get to, you might want to change that default value. Diving deeper and just kind of showing this visually, this is a chart that I'm sure a lot of people are familiar with. You've all been watching it recently. We've got NVIDIA here. We've got the prior uptrend. We've got the formation of a base. And let's take a look at how RMV changes with respect to the price action. So here we're seeing a big spike in RMV all the way up to 100. What happened? The stock gapped up on earnings. We're seeing price expansion. Then, over here on the right side, we're forming a range here of 5-6 days. What's RMV doing? We're contracting because this price action is tighter than the recent price action and what's normal for the stock. So RMV, as it gets closer to 0, that basically means we're forming a tight range. As it expands, it means we're expanding relative to the recent price action. So these 2 days moving up is a lot more volatile than the recent price action, which was pretty tight closes as we pull back here. So that kind of created this price expansion and push towards 100 on RMV. But very simply, we want to look for, in terms of, if we're looking for tight areas, we want to look for points where RMV is declining really sharply and getting as close to 100 as possible. Here, after this gap up, we see a tight range form right here with these 3 bars. What's RMV doing? It's pulling back sharply and forming a little kind of trough here. These troughs are what you want to really highlight here. We've got another one here as we get really tight, these two bars. We get really tight here where we're forming this tight 3-day range. And then we get tight again here within this handle, which we just kind of resolves the upside, and we're starting to see this price expansion. So in terms of finding tight areas and kind of the cheat sheet for finding those VCP pivots and all that, we're looking for RMV to get as close to 0 as possible. And we'll go through a lot of examples to kind of bring this to life, as I mentioned. Rai, are there any questions so far that you want me to answer that I haven't really addressed just yet?
There's a question on the look back period and how that works.
Yeah, so for an indicator like this, because we're looking at a relative basis, we have to set a window of price action to compare the recent price action to. So the look back period is that duration, that subset of price action that we're using to set the standard for volatility over that period. So if we're currently on this day here, we're using a look back period of 15 days to kind of decide, what is normal volatility over the course of this price action. And if the current price action is a lot less volatile to that standard, then RMV will be close to 0. If we're currently expanding either to the upside or downside, and we're a lot more volatile than that look back period of 15 days, then RMV will, basically be pushing towards 100 because we're on the upper edge of that range. It's kind of like a stochastic, if you guys are familiar with that. But really good question. Anything else, Rai, that you think I should go over before we keep going?
How is tight different than sideways? I think that's a good question to tackle. Is tight price action versus sideways price action?
I think it's pretty similar. Tight can also be a slight drift down, and that's kind of what I prefer personally. But tight could also be a slight drift up, but we want very, very slight. So I would say in general, you're pretty much looking for the same thing, but sideways suggests more of a longer term tight area to me. This is kind of a really nice, drift down sideways. But this is also a tight area. So I think they're pretty much synonymous. I can't say that word right now. But tight, it can be a lot less than, this is 5, 6, 7 days, while tight can just be 1 or 2 days, and that can form a pivot that can be a really good entry point. But I
Right.
like that
And
question.
and the depth on sideways price action can be more than, 3, 4, 5%. Whereas when you say tight, you want to define your risk to be within 2, 3%, if not, less, depending on the type of trader you are, right? So the high to low in that range for tight is always much more narrow. You could define your risk much, much better. And in sideways price action, it could turn into a flat base for all we know, right? And at that point, it might not be considered tight whatsoever. So,
Yeah, I'd say it also depends on the character of the stock, right? Whether it's a really volatile name or it's a slow mover that's been around for 20 years. And that's where RMV kind of comes in really handy because it adjusts to whatever the character of the stock is. A volatile stock, if the volatility on a relative basis is declining, we're still going to get that RMV signal. And if it's a stock that has a billion shares, it's been out forever, you think it moves, we see a great trend like this and it actually moves only 5%, we're still going to see those same RMV signals because it adjusts to the character, it's normalized to the character of the stock. So that's another great thing about RMV. Anything else, Rye, before we go on?
no, I think we keep going.
Okay. Hopefully, with these examples and the live charts we're going to go through, everything comes to life. But hopefully, we can answer as many questions as possible. So here we've got an example. We've got another example of interpreting RMV. This is another stock that I'm sure all of you guys are familiar with. We've got SMCI. We've got clear price expansion where we see spikes up to 100 as the stock is pushing higher. Then we push lower and we see a little bit of price expansion. But overall here, we're seeing price get tighter, RMV come down. We see a drop all the way to zero on these tight days. You can see how tight these are relative to this price action here. Look how we're going sideways, not moving up and down much at all. Tight closes, all of that. That's what causes, this to go to zero. Then again, we push higher, we break out of this range. We're seeing price expansion. Then we contract, form this sideways range. And again, we're seeing RMV reflect that, fall all the way to zero. And then we get some more expansion, this time to the downside, form a little bit of a tight range. We pull back slightly. Then we expand up. We break out in a big way and see that price expansion. This pushes zero. So again, the key thing with RMV, price expansion is when we move higher towards 100. A tight area is when we get really close to zero and go sideways for at least 1 to 2, 3 days and form a tight range. So in terms of the tight ranges here, we've got one here, we've got one here, and we've got one here. And this overall is a little bit tight relative to normal price action. And back here, we've got a tight range as well. You can see 1, 2, 3 days. All of these are pretty much grouped right on top of each other, going sideways. We see RMV drop really low. So this is a good example of RMV and expansion, power, and then a tight area that could be used as a really good entry point. And a very subtle entry point that most traders who aren't like Oliver Kell, aren't a top trader, they won't spot this entry point, this short-term pivot where you can manage risk at these lows, this low of the day, and jump on this trend. But if you're using RMV, you'll be spotting this point just like those top traders. And that's what I think is the real benefit of this indicator, is highlighting these subtle tight areas that are a sign of accumulation, and then again a potential entry point into the stock. So I saw a question, which is a really good one. I think it was from you, Justin. Are there times where you might want to change the look back period from that 15 days to something shorter? And the answer is absolutely yes. And the first situation is IPO bases and very recent IPOs. And that's because like an EMA of a 20 period EMA, you need 20 days to create that EMA. Just like that with RMV, you need, if you're using a 15 period RMV, you need 15 days of price action to create, set the standard that allows you to create the RMV plot. So when it comes to very recent IPOs, I often like to adjust the period to 5 days, and that makes the RMV a lot more reactive. There's going to be a lot more up and down signals, but it allows you to plot a lot earlier within the price cycle when only 5 days have occurred, and then you're looking for those entry points in the IPO base. And here we've got A Lab from earlier this year. We got an RMV signal where it pulled back to zero right before this big breakout here. We see a very tight range these 3 days. It went all the way to zero, and then we got the breakout the very next day. But you can see that, if this had occurred before 15 days, you wouldn't have gotten that RMV signal. So you might want to adjust it to five period. And that allows you to just see a lot more signals. We see the tight area here highlighted right here. We eventually resolved to the downside, expanded to the downside. So you still got expansion. We just expanded to the downside here. And then it again, the 5 period highlights this subtle tight area right before this big move, which definitely was a day trade, swing trade opportunity. It didn't end up turning into a position trade opportunity, but it was definitely a powerful move. This was like an 18% range bar. So this allows you to really highlight those tight areas that cause these explosive moves. And if you remember the Google chart that I showed previously, I had that set to a 5 period just because we didn't have 15 days of price action before that tight area emerged. So the IPO base is one of the key situations where I like to drop this down to 5 periods. And the other one is after a really explosive bar, likely on earnings or a huge gap up. And because that's such a huge burst in volatility, it's kind of going to skew everything where any normal volatility after that looks tight. And you'll see a drop off on the normal 15 period RMV. So after an explosive move like this on earnings, this is another situation where I'll often switch in settings, the look back period to 5. So, after just 5 days of price action after this explosive move, we've got kind of a normal RMV again, where it will identify these tight areas here and highlight, when it goes to zero, we've got a tight range here. This is PI from just a few days ago. This is a tight range that forms here, and we go to zero, and then we explode just the next day, and we had some nice fall through today. But if you're just using a 15 period RMV, you can see that everything is kind of flatlined after this big move up, because it's still taking into account this large expansion here, and that's setting the standard. And although it's still declining RMV during this tight range, it's not quite as obvious as a 5 period. So to sum it up, the two situations where I'll switch the RMV period to 5 is after a really large earnings gap or during an IPO base. And that's for different reasons. This one is because there hasn't been enough price action. And this one is because, this big event, this big burst of volatility kind of skews everything if you still keep it to that 15 period. So hopefully that answered your question, Justin. Yep. Awesome. I see your response there. Perfect. Okay. All right. So, it's all well and good to have the indicator here, which highlights the tight areas, but how do you identify the buy points? How do you kind of draw in the ranges and look to buy from them? So this is where kind of RMV pivots come in, and we'll actually have this built into pattern rec somewhere later down the road with Deepvue, but you can do it really easily just looking at the indicator. So what you want to do to draw in these points of resistance, these pivot points, is whenever there's a tight signal, an RMV tight signal where we drop significantly, get really close to zero, you want to move up your cursor from that point, look at the chart during that point, identify the range that's forming, and find kind of the key price level that defines the high of that range. So with this example, we move up, we see these 3 bars are really tight. This is the highest bar of that range. This high is there. So this becomes that RMV pivot, and I like to draw that over to the right-hand side. Moving on, again, we see RMV come down. This is another tight signal. We move up. We see these really 2 tight bars. The highs are pretty much the same point, which is even better. We can draw in that pivot sideways, and this becomes the high of that range, the potential buy point, and we see it actually resolve the next day, and this starts the move up, which would put you in a really good situation come this event here. If you had caught this initial move up, you got a little bit of cushion, but just in general, you're looking to put that high, put the pivot at the top of that range that you identified with the tight signal, and that can be your buy point here. And this range that was formed here triggers later on with this explosive move. You can see how explosive this is, and that's because we're coming from a sub range right here, and that's what leads to this explosive move that gives you a profit right away. and sets everything in motion. Using this as an example here, we get the tight signal right here. We're at 0. We move straight up. We look at this range. What is the high that's significant here? For me, I'm looking at this range as here, these 3 bars. This high to me is pretty significant because this high is pretty close to this one. So this becomes the level, but you could have, just as easily put it at this high and it wouldn't made too much of a difference in terms of the level that you're using. But there's always an art to it a little bit. But in general, you're looking for that tight signal, move your cursor up, identify the range, identify the key high of that range, and then draw that across, and that will be your buy point later down the road. So again, with this tight signal, we move up, we identify this range, which is these 2 bars. We say this is the highs are pretty close together, this is the buy point, and then the next day it triggers, and you could have really jumped on this trend, which obviously turned into a monster move. Using the last example here, we get the tight signal, we move up, identify the key high of that range, which is this one, and then this is your buy point in a potential day trade, swing trade, position trade, whatever is relevant to your style and time frame. So that's pretty much how I looked to set pivots and potential buy points using RMV. But I want to pause here and see if there's any questions in terms of this. We have definitely a bunch of examples, but want to clear anything up if there's any kind of key questions here. Rod, do you see anything specifically?
Yeah, I see a good one. It says, how do you come up with the 15 look back period? What's the basis for that? And for position trades, do they increase it from 15 to 20 or 25?
Yeah, really good question. I came up with the 15 based on a lot of trial and error. I looked at a lot of different charts. I looked at a lot of model book charts using RMV from the past few years, and changed the value quite a bit, looking at all those different charts to determine kind of what gave the best actionable signal, and what didn't give too many signals as well, right? Because an indicator is pretty useless if every other day it's highlighting something. And 15 days ended up being a really good sweet spot for highlighting the key moments, but also not highlighting too many moments. And in terms of style, I would say 15 days works pretty much for all time frames. And the reason it's different than using a 21 period moving average if you're a swing trader versus a 50-day if you're a position trader is because adjusting the look back period just increases the window that you're looking at the volatility. And that volatility doesn't, a 15-day volatility versus a 50-day, it doesn't really change much if you change that value. But there may be some circumstances where you might want a 50-day look back period. But just based on a lot of trial and error, I found 15 days works really, really well. That's a great question.
Awesome. There's
All right.
a lot of questions on how do you scan for these. You're going to share screen a little bit later, just build a scan, right? So
Yeah, we've got multiple presets in Deepvue that build in RMV right into the screen and look for stocks that are forming these tight areas right here in the moment. So we make it really easy with a few clicks, and we'll show that later on the presentation. But it's super easy to use. RMV is a data point that you can use to screen. So you could create a screen for yourself in just a few seconds that looks for stocks with RMV right at 0 or under 5 or under 10 and are forming those tight ranges that then you can look through and see if they meet the other criteria that you're looking to analyze a stock. But yeah, really good question. And that's almost where RMV really shines, is that you can screen by it, because I'm always looking for these tight areas. But I had before this I had to go through a lot of different charts and identify them manually. RMV kind of saves you time. It allows you to just find it using using that data point. So good question. All right, so here's another weekly chart. So this is another circumstance where you might want to change the default from 15 days. And for weekly charts, I use a 3-week look back period. And that's because, if you take 15 days, that's about 3 weeks here. And I found again through trial and error that this is a pretty good value for weekly charts. And this is NVIDIA from late last year that caused the breakout early this year. And it highlights the tight area right here, the tight weekly area. So again, this is fractal. It happens on all time frames. We've got this pullback, this tight area signal, and then you're looking to set the high of that range, and that's your buy point, and that allows you to catch the trend as it comes out of this larger period. This is another great example of VCP as it forms, one pullback, two pullbacks, three pullbacks. You get shallower and shallower as we go through the base. Volume is contracting as well, and then we buy through this pivot, and that creates this really explosive move. So this is an example on a weekly chart. Just want to show that as well. I typically use this on a daily chart because that's better for my time frame, but definitely position traders who look at a lot of weeklies can use this as well. So RMV and tight areas, they don't always resolve to the upside, and they can definitely be used to the downside as well. Obviously, when market conditions and trend conditions, decree it. So this example from ARM, just a few weeks ago, as we were pulling back in this correction, we formed this longer term base, and then we're kind of leaking down below the moving averages, and we form this subtle tight area these 2 days here, where RMV drops to 0. And that was your pivot. If you look at the lows here, the lows of the range, instead of saying your pivot at the highs, you set it at the lows, and that led to this explosive move downwards. So if you look at any stock and look for expansions up or downwards, you'll often see an RMV signal right before it, whether it's the day before, 2 days before, 3 days before. There'll often be a tight area right before that really explosive move. And I think Leif actually tweeted this out, the same chart right in this moment. He bought this, and I looked at RMV, and sure enough, it formed a tight area right before this explosive move down. So this isn't just helpful to the long side, it can be helpful to the short side as well, because we can play expansions to the upside or to the downside in this case if we'd like to. All right, here's a very recent example of PAAS, the miner. And you can see the RMV tight signal right before this explosive move upwards. We get a nice drift down these tight days here. We also see tightness here. That's highlighted in RMV. Even here is a little bit tight. Here's tight as well. But we always see that signal right before this breakout. And that can help you, jump on these and be watching them and have them on your daily focus list, set before this occurs. Even now, is pulling back and forming a kind of continuation buy point. I think it actually closed pretty strong today. I took the screenshot earlier today, but we really highlighted it nicely with this RMV tight signal. And even before this expansion move up, we see RMV go right to 0 before we push off the moving averages and start this nice trend above the 10 EMA here. So that's a nice recent example. And I also wanted to highlight here, again, drawing in the pivots as we walked through that process earlier, but also in Deepvue, not only do we have the indicator visualized in this case, but we can also plot either circles or whatever indicator you want using the Deepvue technical patterns when RMV is below a certain number. So here I've got RMV under 15 highlighted. So we highlight those same tight areas using this indicator. You see these markers below the points where we see RMV highlighted. So if you don't want the RMV indicator down here, I personally like watching this view. You can have this plotted on your charts and it will show right under the tight areas right there for you. Another really nice time saver, especially if you're new to this. This can be really helpful and help training your eye to spot these tight areas. We see it highlighted most recently right here before the breakout, and then on this day, this inside day, right before this continuation move up. So we also have this proprietary Deepvue technical patterns indicator, which has a lot of different indicators, but what we're using it here is to highlight RMV when it's below a certain level right there on the charts, right there for you, which is super helpful. Here's an example of coin from last year. If you just look at this move up the right-hand side of the base, this decline down and then start move up, it's not that easy to spot the best ideal entry points, but the top traders like Oliver Kell were all over this and able to ride this trend. So how can RMV help us, identify those low risk buy points, those ranges where we can manage our risk and look to enter the stock as it explodes upwards? Well, let's see. We've got RMV now. We've got the technical patterns plot here. It highlights these 3 bars, this tight range right before we break out. Then we pull back in, tighten up again. We see the RMV indicator right here highlighted. We pull back again, we get another signal. Then we pop up, we break out, and then this starts to move up. And then here, as it kind of consolidates for a week, we get another subtle buy signal here. And this could be used to, again, add to shares or start a swing trade entry, and this leads to a nice, resumption of that trend as it continues to power higher. But the key thing is here is if you don't have RMV or if you don't have, the technical patterns indicator, it's just harder to kind of interpret the chart and find those subtle points where the stock is tightening, showing accumulation and showing a good low risk entry. But with RMV, both in this form as well as the indicator on the chart, it's really easy to highlight those tight areas up the right hand side of a base. And then here I've got the pivots drawn in as I would. Again, you just kind of look for that signal, move up, identify the range, and then draw that pivot horizontally from the high of that range. And here we get a retest, and this happens often, a retest of that pivot. This becomes kind of a key level that you can look to play pullbacks off of, and then obviously buy as we break again from that range. So those are the RMV pivots that I've drawn in based on the RMV signals. All right. So I mentioned that it can also be used intraday, and I actually kind of just wanted to do a proof of concept, and I looked at GME because it's obviously in play recently, and it actually formed some great ranges, some great RMV pivots today, and I traded this. This is the screenshot based on the bar that I bought today. But first things first, on an intraday basis, you're always going to have volatility right at the start if we have a gap up or gap down. So similar to an IPO base or a big expansion move on earnings on a daily chart, you kind of want to discount the first, few signals based on RMV. So, as it settled into this base, this is finally when you can start looking at the signals and looking to, identify tight areas. So this is really the first clear signal as RMV dropped to zero. Looking up, it's a pretty tight range. Intraday is a little bit noisier, but we still got a clear range here. This is the key high for me, and that's kind of based on this is just kind of a wick, and to me this is the tightness that I see and I identify in the chart. And so I draw a pivot all the way to the right hand side. It ended up being resistance here. We tried to break out from it, failed back in here, and then as we pulled back in, we formed a lot of tightness right here. Look how tight this is relative to this price action. Even this price action, we're seeing that same tightening from left to right throughout the base. And then this is kind of the key range here that I identified where the high is around here, the low is around here. We see RMV go all the way to zero here. And then I bought as it broke from that range here and pushed higher. Here's my entry point. Here's how the trade ended up. It ended up working really nicely. We broke out, actually formed another tight area highlighted by RMV going to zero. Pushed out again, formed another tight area. We see a little bit pullback, and then we really expanded higher, pulled back, formed another tight area. We see RMV pull back to zero. We expand upwards again on this bar, expand upwards again, and you can see that reflected in RMV. So again, this is just kind of proof of concept. You can use it on any time frame. It's a very fractal element in the markets. And this is an example on an intraday chart, VCP, buying from a range and eventually trending nicely, catching that expansion upwards, and then just riding above the moving averages. And I sold this into the end of the day just because I'm not going to hold overnight a stock like GME, which can gap up, gap down 30% on any given day. But this is kind of a rarity for me. I typically use RMV on a daily chart. This is just kind of a proof of concept and a kind of proof of concept trade, honestly, with RMV, using it on an intraday. So Ryan mentioned screening with RMV, and basically I think this is where RMV really shines because it can save you time in terms of finding stocks that are showing the VCP characteristics, and then you can just focus on those and see if they meet the rest of your criteria. But if you didn't have RMV, you just kind of have to look through a lot of charts manually, stocks and uptrends, and try to find tight areas on the right hand side. And it can be you can look through hundreds of charts and not find one. But with this, you're able to basically look for stocks that have RMV, there it is right here, less than 10, and bring up their charts. And you can add other criteria such as ADR, dollar volume, all of that. And you can also set criteria such as, absolute strength ranking, which is very similar to RS rating. Basically, in terms of 1 month, it's in the top percentile of stocks. And we've got this power and tight screen, which is basically looking for power plays and then tight areas. and then just kind of tight range screening, which is more trending stocks that are forming tight areas. So these are two presets that we have in Deepvue, just a few clicks away, that can really save you time during your routines. And I kind of like to look at these, especially when a lot of tight areas are forming in the markets. I bring up these charts, go through them, and see if there are any really strong stocks that are forming tight areas that aren't already on any of my watch lists. But this is the criteria for the tight screens. And this RMV data point, that's kind of the key that allows you to take advantage of this and find those tight area charts really easily. And the best part is that you can pair it with the mini chart view in Deepvue and scroll through the results of these screens really quickly and just, visually identify the ones that you like. You can check the ones you like, add them to a watch list. So it's a really nice streamlined routine and flow that allows you to, take advantage of these tight area opportunities and potentially trade them for some nice swing position or day trades. Also, you can also add the data point as a column and then sort your watch list or another screen by it. And this is probably how I use the RMV data point the most. This is my favorite way to sort my watch list. So this is my universe watch list. I've clicked the column header here once, or actually twice, and that way we've got all the RMVs that in ascending order from 0 up to 100. All these charts are reasonably tight, relatively tight to their recent price action. So I know, that these are likely the best opportunities from my watch list for the next day or the next few days. So AA is forming a continuation tight area. Amazon, big upside reversal, forming a tight area. We'll take a look at these charts in just a minute. But being able to sort by this really helps you focus on the stocks that are ready to go potentially the next day. And as I mentioned all the way at the beginning, that's one of the key points of this webinar is how do I identify the very top few opportunities that are ready to go the very next day that could potentially break out and expand. And having this data point right here is really helpful in doing that because you're able to focus on the tightest possible stocks. And that's basically my favorite way to sort all my watch lists and screens and just go through them and see the charts, see if there's a pivot, all of that, and potentially look to add them to my daily focus list. All right, so taking a step back, 3 steps for trade execution, all the way from screening all the way to executing. Screening and ideation, what we just covered. We've got the Deepvue presets, we've got the RMV data point that allows you to find stocks that are forming tight areas really easily, and that allows you to build a universe of stocks that are forming tight areas in just a few clicks. Then from that, you build a focus list. You look for the tightest setups that, remember, we're not just looking for a tight area in isolation and we'll trade any old tight area. We're looking for mature bases. We're looking for the strongest themes, the strongest stocks, revenue growth, earnings growth, the end factor. All those things have to come together to form the A+ setup. So it's not just about the tight area. The tight area is kind of the last piece of the puzzle, which allows you to enter the stock. But we're always taking it back to, the longer term context, the longer term potential of the stock. So we're looking for tight setups within mature bases with any other criteria that you use to analyze the stock. Then once you've identified that focus list, you're looking to execute. You set alerts right under the RMV pivot points that we talked about. On the breakout day, we're looking for high volume run rate, and then we're looking for explosive moves, both in terms of price and volume through those areas. And we've got kind of alerts in Deepvue that kind of highlight these key points. We've got the relative volume. If it's under 1, it's right below average. If it's over 1, say 3, it's 3 times the average. And we've got the price surge, which is the recent price movement of the stock as it triggered this alert. And this is available both in text as well as email alerts. And it allows you in just this quick picture, get a sense of the price move of the stock and to see if it's actionable based on the alert. So these are the 3 steps from screening and ideation to building that focus list all the way down to executing. Rye, anything you want to add before we move on to the live demo based on anything that I've talked about or on these key three steps, maybe something that you personally do?
Yeah, I see a lot of questions on, you know, how do we use this? And, is it a buy point? Is it a signal? Is it, can be used in isolation? I think this slide answers a lot of that. It's important that it's RMV at the end of the day is taking 12,000 stocks in our database and giving us the tightest stocks that are there. And that's the focus of RMV. Everything else that comes into it, is it part of the AI theme? Is it a growth stock? Is it a utility stock, right? That's not going to move. You want to ignore those. So based on the all the other things, you surround RMV with those other things to build a killer scan, right? So the purpose of this webinar is to show you guys that you can go from 12,000 stocks down to 100, right? Very quickly that are tightening up. And then within those 100, you still have to do some chart work, right? And it's much better than going through 400 charts, 500 charts to figure out which ones are tight, which ones are not. The second thing it accomplishes is it takes your bias out of it because tightness can be relative to how your eye is trained to it, right? Whereas RMV is now a scientific mathematical
It's
measure
objective.
of, of tightness. And it's not looking at, trader A might say this is tight, trader B might say no, it's not. Trader C might say a completely different thing, but you tune, the settings of that look back period to fit your trading style. And then it's almost non-negotiable because that, as it goes to zero, it's tightening. And that's just it. So it will help you and assist you in kind of removing a little bit of bias out of your trading when it comes to tightness or looking for tight patterns. The second thing I would say is it allows you to define risk, right? It allows you to define risk very, very clearly where your RMV pivot. I really like what Richard said. You could draw your RMV pivot, right? And your risk will be very defined because you're in a tight area already, right? So it could be a low from a couple of days ago, and you're risking 2 to 3% or 3 to 4%, depending on the average range of that particular name, right? So that would be the second thing. So focus on those. The other stuff, we're not pitching this as this is the pill that you need and all your pains will go away. It's to scan for tight price action, but you still have to come back and look for mature bases, good themes, big volume through that, the trend of the market, all of those things still matter. So,
Yeah, it's part of the puzzle, right? It's there to help you. It's a tool that you can use. And to piggyback off what you said, I would say RMV is most helpful as the last step in the completion of the setup. It's the entry tactic. It's trading a range. So again, we're not going to use entry tactics on any old stock in any old setup. We're going to use it in the strongest setups, in the strongest stocks, in the strongest themes. So that's where it saves you time by helping you find those stocks that are presenting potentially actionable entry tactics. And then you can look and see if the stock fits the other criteria. So really like how you said that, Rye. And with that, I think we'll go to a live demo. But first, I just want to remind everybody that if you haven't already checked out Deepvue's special offer, limited time offer, 2 months for $39, this is a fantastic deal. If you've liked what you've heard today in terms of how you can make use of this and save you time and routines, all of that using RMV, that's only available in Deepvue. So highly recommend checking that out. And you can go to deepvue.com. Ryan, maybe you can drop the link in the description to that or in the chat here. But with that, let's go ahead over to some live charts. And give me 1 second. I'm going to stop share and reshare.
yep, I see it.
Okay, cool. So I went ahead and picked a few stocks that have shown, some great examples of the usefulness of RMV in the past few days. So we'll kind of go through a bunch of charts here and kind of talk through how I analyze a stock, how I use RMV to kind of help with that process. So here we've got Alcoa AA. This is another really strong breakout recently in the past few days. And you can see again my column here. I can sort that by just clicking that column header and then using that to kind of sort everything. So that's how you can use that. So there we're sorted now from tightest to least tight. All these have had pretty actionable signals over the past few days, but Alcoa is a really good example of a tight area happening right below that base pivot that then leads to that breakout. So we're looking for that tighter area within the context of that longer term setup in a stock that has already moved off lows, is already in a longer term uptrend, And this tight area is just the last piece of the puzzle, highlighted by the tight area right here. And there we go. Netflix, this is a really interesting one. This had this earnings gap down, but then we kind of absorbed that, and first of all, formed a tight area down here that then you could draw the pivot here. We can go ahead and draw that in live right here. But then it pushed really strongly, showing great price action. And now again, it's forming kind of a range, forming a consolidation. But you can see it's not nearly forming a clear pivot right here. So if we're looking right now, RMV is showing a pivot here. And looking at these wicks right here where we reverse downwards, I might go all the way back to this bar to draw the pivot here. This is kind of the top of the range in terms of what I'm looking at. And the bottom of the range might be down here right near the 50-day. So it's not always the highest high where I set the RMV pivot. Sometimes if there's a lot of wicks down, I'll look back and see, where did the consolidation start? Where did the range start? And that becomes where I place my pivot. ARM, we already talked about. This was actually what I wanted to highlight here. This nice move, this drop down. So that's pretty much it. SOUN, this had a really nice RMV signal right before this strong breakout. And this, after earnings, again, it might be where you go over to settings and change this from a 15 to a 5. And then you can see that, after 5 days have passed, we're actually getting actionable signals on RMV, and we're still seeing super tight price action right before, this explosive move up. And even here where we pull back, we get tight for 2 days. What's RMV showing? It's showing that tight area where we push up, we form another tight area, RMV goes to 0, we get another really nice move. I believe this is about, that's a 60% move. Obviously, this is a really volatile stock, but these RMV pivots where we're getting these tight areas, they can be really great for swing trades, especially in names like this that have a lot of strong momentum. FRPT, another example of where you might want to keep RMV at a look back period of 5 after this gap up. We get this tight area that forms right here. RMV goes to 0. All these highs are right near each other, so we can go ahead and draw in that pivot. And then it's acted really well the past few days, breaking through this RMV pivot, and good follow through as well, resolving this trend and resolving this range nicely. Oscar, this is a really good example of how RMV pivots can help highlight kind of very subtle tight areas. And this is an IPO or a recent earnings gap, so we'll change this back to 15. And if you're just looking at this, looking at the chart, there's not really any obvious areas, just at a quick glance. But RMV, the 2 times where we go to 0 are right here during this range where you can draw in that high, that pivot right here. And then all the way right here as we pull back to the 10 EMA and go tight, have tight closes for 3 straight days here. And zooming into this one, if we're looking to draw the pivot, again, this kind of fell way off its highs. So I would use the high of this bar as my pivot here, and we can draw that in. And the next day we gap up, pull back in, reclaim that level, and that could be your buy point to resolve this range against the 10 EMA, managing risk right at, the 10 EMA, which is just, a few percent away, 3% away, managing risk really tightly. But again, the key thing is that without RMV, it'd be kind of unclear where the tight ranges are. But with RMV, it really highlights them nicely. This one also lines up with this point of resistance. It's funny how that always happens. And this is kind of an ideal buy point, reclaiming that, pushing through, and it never really looks back. And this has been one of the top performers over the past few months. CRS, I want to highlight, this larger basing period. Then, as we move at the right-hand side, we're looking for those tight areas. And I really wanted to highlight this one, these tight ranges here. RMV goes to 0. You go ahead and draw in your pivot here. It tries to push out here. You might get a failed trade, get stopped out here, but then we gap up and go, push higher, and then even see a little dip in RMV here. But this would have been a really good buy point to ride this trend. And then even within this kind of base on base where we've got a range above this range, we see from left to right tightening in price action, and we get another RMV signal right in this area where if you're running the tight power and tight screen, a tight range screen, it would show up in the results. You could then go ahead and draw in your pivot here, which lines up with this pivot as well, this high as well. And then you're looking to act the next day, pushes higher, and then we get a nice action into earnings, whether you hold through. That's another discussion. That's on sell rules. That's not for today. But you get a profit cushion, and then if you held through, you get a nice move, or you just kind of exit with a nice gain before earnings. But that's kind of up to you. But CRS, a nice example up the right-hand side of these bases. We already covered this one. So again, just highlighting this range here. And then you've got kind of this larger range as well that this bar also triggers. So the most powerful RMV pivots happen close together. So we're seeing these ranges, pretty much at that same level. This range forms a little bit below that. But that's what creates the power here, is when many of these levels appear closely together and we get confluence. And this breakout on huge volume, that's exactly what we're looking for. And then again, this is kind of a follow-on add point where, it didn't close too great today, but this could have been a spot to add a little bit if you built your position here or here on this breakout. ALAB, it kind of formed 3 tight areas. Again, this is where, especially early on, you might want to change, this to 5. But, keeping it as is, since we've already had 15 days now, we've got the RMB signal down here, which signaled this tight range that then results in this breakout. Then again, we were forming this range here. I actually posted this earlier today as we were kind of approaching this high. We got the RMB signal just a few days ago. You identify where the highs are of that range. You draw in that pivot, and then this could have been your spot to enter, managing risk likely at this low. Because this is such a volatile name, you probably wouldn't want to use the low of the range. Keep it a little bit tighter and use this low of the day as a potential stop loss point. Qualcomm, this you can draw in the base pivot, but also very recently after this gap up, and again, big expansion, we might want to adjust our settings to go to 5. But even so, we push up a little bit. We're seeing price expansion, and then very quickly we're getting a lot of tightness. And from this tightness comes expansion, and likely you're drawing your pivot either at the HVC here, or in terms of RMV, I'd probably pick right around here, because this one is kind of wicky. So I kind of pick the start of the consolidation, which would be around here. This could have been your entry point, or using the oops reversal, another entry tactic within this overall range that you highlight with RMV. This could have been your spot to enter and take advantage of this expansion. But another good example of kind of adjusting this to 5 to better see kind of RMV after a large expansion bar. DocuSign, I'll switch this to 15 again. This had a really nice move that really highlights these tight areas nicely, and I've kind of highlighted them in pink here. You can see all the times RMV goes to 0. There's some nice ranges that form as the stock progresses up the right-hand side of this base. And right before these explosive moves up, we get these tight areas where RMV goes to 0. Here got too tight for too long. RMV stayed really low for quite some time, and then we got an expansion down. Then we got very tight areas, expansion down. Tight areas, we start another uptrend to move up. So DocuSign, a really good example if you want to study tight areas and how they lead to significant expansions. We had some really nice moves here back in 2023. We've covered NVIDIA, KLAC. This has been another recent example. Again, this is where we get a tight area right below a base pivot. That's kind of the ideal situation. Up here, up the right-hand side, we see a tight area forming where we've got 5 tight days. We get RMV going all the way to 0 and staying right near 0. And then we get an outside day where you could have bought, through these highs or as an undercut and reclaim the range. A couple different ways to play this range. But this RMV really helped highlight this high handle within the base. CrowdStrike, another one that was a little bit more subtle. It's tough to find, a tight area at the right-hand side here. But if you look at RMV, it's right near 0 on these 2 bars. And if we look back in time, this is the tight range that we're seeing here. And then the next day, it squats a little bit, squats again, but then we push higher. So using RMV, you're looking for that signal. You could use this as your pivot. Maybe you enter these 2 days, get stopped out, or just kind of handle it versus the moving averages and don't really make any progress. But then we push higher and it makes progress for you. But the key thing is RMV kind of helps you to identify that subtle tight area that you might not notice otherwise, and that can be a really good entry point. ERJ, this is, I believe, an aerospace company. Again, a situation where we get the tight area right below a base pivot. That's kind of the bread and butter of this setup. We see a nice prior uptrend, a base starts to form. We actually get a tight area right here. It's highlighted in RMV very nicely. And then as we push up and pull back again into the 20 EMA, we get a pullback in the RMV, we get the signal, and that's when you can go ahead and draw in these highs. That can be your pivot just below the base pivot. You can enter a little bit earlier than everybody who's using the base pivot, and that's what leads to that explosive move. And we got really good fall through on this name. And even back in this area, I didn't even see this. We're seeing RMV go to zero. You could go ahead and draw in a horizontal pivot, whether that's here, or you could draw in a descending trend line to really highlight that pullback. Either way, you can look to act right here before this is explosive move right as it's getting going. And even back in this area, it goes to zero again. I didn't even plan this. We're seeing these highs, break out from the highs, and that's what really starts this momentum move up. So multiple spots where with ERJ where we see RMV really come into play. PSTG, another good example where a longer term resistance line lines up with the short term range. We're seeing these highs here where this is really kind of the key level. And then right on the right side here, this is a recent breakout. RMV goes to zero. And then we get that breakout where we get really nice fall through leading to that explosive move. So again, we're looking for that signal right as it pulls back towards zero. And then we can go ahead and draw in the horizontal line. That's our pivot. And that can be our buy point, managing risk at the low of this range, the moving averages, whatever kind of way you want to do it, low of the day, whatever kind of suits your risk management techniques. But that's pretty much it in terms of the names I wanted to go through. So let's see if there's any key questions. Sorry,
Yeah,
I ran
there's
through.
there's a
Yeah,
few
go ahead.
charts if you want to pull up CAVA, Kava.
So again, we kind of formed the transition here. RMV's pulling back. These two tight days could have been your pivot here. What was the question regarding Kava? Sorry,
Just to go
jumped in.
over Kava, where did you see tightness up as it went up the
Yeah.
right side? What were some of the spots?
Yeah, this was one spot, and then this here with the RMV going to zero would have been a good spot here. But this doesn't have the best ones. It's been pretty wicky, which doesn't quite suit this. But there's been tight areas back here. This flag right at this longer term spot makes sense. You get this tight flag, and that would have been a really nice spot to take advantage of this expansion move up. So that's Kava. What are the names?
There's another one, PAAS.
Oh yeah, pass. Yeah, I went over that already, but yeah,
Perfect. Yeah. And TMDX. TMDX.
GMBX.
Yeah, these are more gap ups though.
Yeah, so this again, what I would do is change this to 5,
Yeah.
and then you can see how tight it is during this range. I actually tried this on this day, and I just took it off at the end of the day because it was basically a scratch trade. It ended up moving up the next today, but it wasn't on my focus. But I try to trade this tight area. So again, RMV going to zero, you can draw in your pivot. Where's the high of this range? It kind of starts all the way back here, but I was using these highs as my pivot. I tried it this day. It pulled back in, and I just took it off at the end of the day. I think it was a tiny gain, but that's how I interpret this one here.
Yeah, that's a
Um,
good point. On gap ups, EPs, pegs, whatever you want to label them, it's important to change the look back period so that it's after the gap up itself. And that's a good point. I should do that.
yeah. And one other really great screening use case is one of my favorite setups is a tight area near the 21 EMA. And in Deepvue, we even have a preset, I think 21 and tight, or I forget what we call it, power and tight, where you can set RMV, less than 10, and then determine, a range above and below the moving average to look for stocks.
Pull up root, ROOT. That one is tight near the 50 day.
Yep. So this is a tight range near a moving average. Yeah,
Starting to get tight
starting to
now.
get tight. It's a little wicky, so
Yeah.
this isn't kind of my preferred range. I like it when, everything's closer together and the closes are near the highs. Those are
Yeah.
stronger to me. This one also kind of has this downside reversal. There's some recent downside momentum. So for me, this base still needs a little bit of time. But yeah, it's definitely, it's starting to see some tightness forming here, which is a constructive sign, especially because we're finding support at the 50 SMA. But this isn't my ideal range to trade, if that makes sense.
Do you want to go over just how to set up your layout? There's a lot of questions on how do you get RMV at the bottom,
Yeah.
etc. What you're doing there. Yeah.
Yeah, let me move some Zoom tools because they're covering the key point. Here we go. Okay, so let's X this out. So say we just have price and volume, whatever moving averages you want. In Deepvue, to set up an added indicator, you want to go ahead and click this icon here, and then you can search either for relative measured volatility right off the bat, or what I like to do because I'm lazy and I don't want to type all that. I just type in DV, and this brings up all the specific indicators that we've kind of added to the platform. And then I just go ahead and find relative measured volatility, load that up. It doesn't have the settings that I have currently. This is kind of the standard state. I've adopted this kind of monochrome look, which is way prettier than your charts, Rye. But basically, to adjust the settings, you just go to settings. You can adjust the visibility, style, all of that. Change the color of these zones here. And these zones you can set to whatever level you want. I kind of have my top one at around 30, I believe, is my setup. And then this one about 25, and this one around 10, this one around 5. And this just helps you kind of set zones that to highlight specific levels of tightness. And let's actually just leave this at 0. And then you can adjust the colors, of course. But yeah, under 30 is getting tight. Under 25 is getting tighter. And then under 10 is pretty darn tight in terms of RMV. And you can also adjust the plot, make it black, adjust the thickness, make it really pop. So that's in short kind of how I set up RMV really nicely. And to add the technical indicators, what you want to do is DV technical patterns right there and click settings. And then you've got all these different ones that you can add. But we'll go ahead and just turn on RMV. So we'll check this one. Let's do under 8. That's a good kind of rule of thumb number that I found for this one. And then you can adjust the style to, let's make it black, and let's make it a diamond, whatever you'd like. And you can see where RMV is tightening. It's highlighting now with that technical pattern. So those are kind of the two ways to set up RMV, either with the indicator or with the technical pattern. And just with the technical pattern, you can see all the different patterns that we built into the platform. So there's a lot to try here, even above and beyond RMV.
Awesome. There was a couple of questions on what setting do you use if it's on a weekly chart and monthly? What are some recommendations there?
I haven't really used it on a monthly. On a weekly, I like 3. So look back period of 3.
Awesome. There's another one, CARR, if we haven't covered that one yet. Someone wants to take a look at that symbol.
Yeah, so this hasn't gotten too tight. There was this little bit here. It got pretty tight right before this expansion move up. So it was pulling back. It starts to go sideways from this range, and you'll kind of see this at the bottom of bases or turning points. But there wasn't really any key patterns that I would personally trade because I don't really trade these, right off the bottom. I would wait for a momentum move up and then tightness. So, but this is kind of at a turning point here.
The other one is KLAC,
K
KLAC.
KLAC, yeah.
Funny.
Yeah, so we went over this one already. I really
Yeah.
like, so this is kind of the setup I'm going for,
Yep.
where we're up the right, we formed a base, we're in a longer term uptrend. This is part of a key theme. If we bring up the stats table, this has, in the future in terms of the estimates, which is great in Deepvue that you can see the earnings and sales estimates going forward. We're seeing acceleration in earnings, acceleration in sales growth going out into the future. So it's got everything. It's got the theme, it's got the trend, it's got the growth. And then in terms of the chart, I'm waiting for the stock to start moving up the right-hand side, and I'm looking for a tight area to form where I can set a clear pivot point. So again, RMV went to 0 right here. I'd go ahead and draw in the high of this range, and I'm not putting at this high because that's kind of wicky. I'm trying to get kind of the average high of that range, and then this would have been your buy point, or as an undercut and reclaim that right here, and then we get really nice fall through here. So KLAC is a great example of how I like to use RMV, where we've got everything going for it. We've got the theme, the longer term trend, the growth, and then moving up the right hand side and forming a tight area. So that this is a great example, I think, to end it on. Rye, any other questions that you think would be good to cover here?
I'm just going through them. There was one that if you could go through the screener criteria, just one by one, showcasing your thought process as to why you added each of them.
So I've got the tight range loaded here, but let's get rid of that just to show how to load it up and find it, just to show how quick it is. So you want to go ahead and click the drop down menu, go over to screener presets. That's where all the Deepvue presets we have are. And you can see if you just go over top traders, we've got a lot of them from some very top traders, Kalamagi, Oliver Kell, Minervini, that you can check out. But the tight range ones are found if you go over to Deepvue, and you got to scroll down a little bit. We've got tight range here, and then I'm not quite sure where the other one is housed, but the tight range one, I'll go ahead through that one. We can load that up right there, and you can go through the charts manually, and you can see this is starting to form a tight range. APPF, a little bit wiki here today, but in general, these are starting to form tight ranges in general, and you just have to see, this one's moving up the right-hand side. This would be more kind of my style, where we're forming a base, moving out the right-hand side. You could set your pivot right here, but bringing up the filters, let me move my camera here. First things first, we're looking for tight areas, so we're going to use RMV to be less than 10. That's why we've got this, and let me zoom in here so you can see this filters a little bit better. Dollar volume, I like to set a minimum. Usually I use 20 million, but I want to, keep an open mind here and see more stocks rather than less. So we've got an average liquidity requirement of $10 million on average. Here, I'm using an ADR requirement to make sure that we're looking for stocks that can actually, make a move. I want a minimum of $1 billion market cap, just to make sure that we're trading real companies pretty much. I want it to be over the 50-day SMA, so it's in an intermediate term uptrend, above the 200 SMA to make sure it's in a longer term uptrend. And here, I want to make sure that, over the past 5 days, we haven't really progressed too far. And the tight area that we're seeing isn't, moving up. We're kind of drifting down. That's the look that we're going for, or inside. Or this can be true, but we can have a double inside day, and that would be another element of volatility contraction. So those are the two requirements here. So in general, we're looking for a tight area in a reasonably liquid stock that can move, that's in a longer term uptrend, and that is forming, a tight range over the past few days. So that's kind of walking through step by step this screen. And you can definitely take this screen and use it as a foundation for your own, tweak this, make it even stricter. This is showing only, 83 stocks, but you can make this a lot stricter, say less than 5 here, and then you could only focus on the really, really tight stocks. But this, I think, is a great starting point for looking for tight areas.
Awesome. We do see a lot of other, just going over charts and stuff. I would say, pull up RMV on your end, add it, use the tight range, go through the symbols. You can duplicate this preset, right, for yourself, tweak it whichever way you want to make
Yep.
it even. Right now it's given how many names? 83, right?
Mm-hmm.
So depending on your style of trading, it's completely customizable. And yeah, I think, Richard, we could wrap it up there.
Yeah, apologies for some of my coughing. I'm still recovering it from a cold here. But thank you guys so much for tuning in. Hopefully you guys found this helpful. If you have any further questions, please reach out on Twitter. I'd be happy to answer as many as possible. We'll probably be doing another webinar pretty soon on this topic, so we'll hopefully be able to address those there. And yeah, hopefully you guys try this out, make it your own, see if it helps your process. I think it will. I think it's a great way to help train your eye to spot those tight areas that, again, can be signs of accumulation, but also really good entry points for you. So thanks so much for tuning in. Great to see a lot of thank yous. Thank you guys so much. Yeah, have a great rest of your day. And yeah, we'll see you guys in future videos. Take care.